Imagine this. You're starting from scratch. No credit cards, no loan history. Maybe you're a student, a newcomer, or someone who's just playing it safe. But here's the problem. You're invisible to lenders. They don't know your habits, your reliability. Yet, building credit doesn't have to mean diving into unsustainable credit card debt. In fact, the best path might be non-traditional tools that prove your responsibility without the risk of overspending. Today, we'll show how to build and skyrocket your credit score using clever, secure methods, credit builder loans, rent reporting, utility tracking, and more. Ready to become score savvy without carrying plastic? Let's go. Banks and credit bureaus don't just watch card users, they care about real-world financial behaviors. Because at the core of your credit score is these powerful signals: payment history, amount owed, length of history, credit mix, and new credit. But here's the good news. You can start building or rebuilding your score using alt credit tools before ever touching a credit card. Let's break them down. 1. Credit builder. Loans. Borrow to build, not to spend. Think of a credit builder loan as the opposite of a traditional loan. You don't get money up front, the bank does. You make monthly payments to a locked savings account, and once you're done, you get the lump sum back, with interest you've already paid. On-time payment equals score boost. Every payment reports to all 3 bureaus, building reliable payment history. Low limit equals low risk. Typical amounts range from $300 to $1,500. Way easier to manage than big debts. Checklist. Choose one that reports to bureaus, has low fees, and a comfortable repayment term. Complete the loan, get the money, you still own it. And the best part? You've proven you can repay consistently, every month, like clockwork. 2. Rent reporting services make rent count. Did you know your landlord paying rent monthly can build your credit? It's true. If you sign up with services like Isusu, Rent Track, or Level Credit, they report payments to the credit bureaus. Huge monthly habit equals great history. Rent is often the biggest monthly expense you can reliably make on time, especially powerful for renters. Students, new professionals, and young adults can start building history earlier. Choose wisely, check fees, make sure it reports to all bureaus, and monitor your report monthly. You don't need to move or buy a house, just pay rent and watch consistent history rack up. 3rd, utility and telecom bill reporting. Living without credit cards? Your utility bills, gas, electricity, water, or even your cell phone bill can reinforce your trustworthiness. Wait for 2025 updates. Major credit bureaus now accept positive utility and telecom data in their scoring. Use reporting services. Companies like Experian Boost can add utility, phone, and even streaming payments to your credit file. Instant impact. Many users gain 20 to 30 points right away without any traditional borrowing. That monthly phone bill you pay automatically, it might already be boosting your score if you activate the right services. 4th, student strategies. Rebuild credit before it starts. If you're a student or young adult, the credit world can feel off limits, but banks partner with schools to offer secured student cards or starter credit builder accounts. Secured student cards, a low-cost way to borrow your own deposit, build payment history, and graduate to unsecured cards. University-sponsored loans. Even small installment student loans add variety to your credit mix. 5. Automating and trackability. These strategies only work if done consistently. Here's how to maintain momentum. Auto-pay everything. Avoid forgetfulness with automatic payments that align with your payday schedule. Monthly monitoring. Free tools from Wise Consultant alert you to changes immediately. Budget around your payments. Treat all recurring payments, loan, rent, utility, as non-negotiable. Never mix high-risk funds. Keep separate accounts for bills versus lifestyle. Why this works. What ties these tools together? They all build your payment history, the biggest single factor in your credit score. By paying on time, every month on things you already use, whether it's rent, utility, student living, or a small loan, you build a financial track record lenders trust. Early wins. You begin seeing credit improvements in just months. Low risk. No overspending or unnecessary debt, just disciplined performance. Scale responsibly. After 6 months or so, you can transition to a traditional credit card while riding on your strong alt credit history, putting it into a plan. Let's create your personal launch plan. Open a credit builder loan with a regional credit union or fintech. Set up rent reporting or Experian Boost with verification. Automate utility and phone bill payments. Maintain these habits for 6 to 12 months. Monitor your credit monthly. Apply for a starter or secured credit card once your score is around 620 to 650. Use the card for recurring expenses on autopay. Stay below 30% utilization. Continue reporting alt payments to strengthen your score. What to do next? You now have a roadmap to build credit without risky cards. One that grows steadily, securely, and with zero headline risk. How to transition transition to traditional credit products responsibly and provide you with the exact habits that keep your profile strong long-term. From foundation to flight, sustaining and scaling your score, you've laid the groundwork, established payment history with credit builder loans, rent reporting, and utility tracking. But the question now becomes, how do you maintain momentum, avoid the common traps, and eventually step confidently into traditional credit without sabotaging the reputation you've just built? Payment history, still your #1 credit asset. Let's be clear, no matter what credit tools you use, cards, loans, or rent, on-time payments are the lifeblood of your credit score. FICO and Vantage Score weigh this category heavier than anything else. If you miss a payment, especially by more than 30 days, your score can drop by 90 to 110 points in a single event. Avoid this with autopay. Set up calendar reminders and linked bill pay through your bank. Prioritize essentials. If money's tight, pay loans, rent, and utilities first. These impact your score directly. Keep receipts. For rent and utilities especially, save documentation in case of any reporting disputes. Credit building for young adults. Credit without crisis. Students and young adults often assume credit equals cards, but let's break that myth. Even without plastic, you can show the system that you're ready to grow. Use school loans as leverage. Making student loan payments on time, even in small amounts, is a huge credit signal. Add phone and streaming services via Boost. It may seem trivial, but Netflix, Spotify, and Verizon payments can be trackable history. Joint accounts done right. If your parent adds you as an authorized user on their card, you inherit their history without needing a card of your own. But make sure their payment behavior is spotless first. Transitioning to traditional credit responsibly. After 6 to 12 months of consistent alternative data reporting, your credit profile will begin to reflect positive momentum. So what's next? Opening the right type of traditional credit product and managing it like a pro. Start with a secured credit card. You deposit money, which becomes your credit limit. Charge less than 30% of that limit each month. Pay it off in full before the statement closes. Graduate to low-limit unsecured cards. Look for starter cards with no annual fees and no hidden charges. Only apply when your score crosses 640 plus to avoid denials and hard pulls. Avoiding the false boost trap. Don't get seduced by short-term tricks like opening multiple cards at once or transferring balances to seem busy on paper. The bureaus can tell when you're artificially inflating credit behavior. It might work once, but it rarely sustains. Slow growth wins. Open new accounts every 6 to 12 months, not faster. Don't cancel old trade lines. Length of credit history matters. Keep older accounts open, even if unused. Check your report monthly. Tools like Credit Karma, Wise Consultant's Dashboard, or Experian give you real-time alerts. Long-term strategy. Build, scale, sustain. Once your profile has 6 to 12 months of solid history, no missed payments, reported utilities, and low balances, you're ready to scale, but never lose your system. Keep doing what works. Keep balances below 10% if you open a card. Ready to level up your credit strategy without the plastic? We've helped thousands build scores that unlocked cars, homes, and business funding without falling into the debt trap. Visit wiseconsultant.com now for personalized credit building plans tailored to your unique lifestyle and goals. Your future credit story? It starts now with action, not anxiety. Wise Consulting Enterprise. We could help you in such